In 2023, 64% of LGBTQ folks who were surveyed said that they either weren't on track or didn't even know if they were on track to retire at the age that they would like to.
Across all income brackets, LGBTQ plus people are less likely to feel that they are confident that they'll have enough money to retire comfortably. And that's hot garbage.
It is. And we really want these statistics to improve and more queer folks to actually feel like they're financially fabulous when it comes to their retirement. But this can only happen if we know a little bit more about our options for income in retirement.
This is Queer Money, episode number 546. And today we're sharing 12 sources of income you can possibly plan on or work towards having in retirement so you too can retire fabulously.
Now on with the show.
Capital One Auto Navigator does more than just auto financing. We're here to help you find a car you love, too. Shop millions of cars from thousands of dealers nationwide. Research your favorite makes and models. Explore dealers near you and more. All on Auto Navigator.
In the community section of our YouTube channel, we posted a poll. We asked folks, what did they think was going to be their largest source of income in retirement? To be honest, we weren't all that surprised.
No.
The top result was they thought it was either their employer-sponsored retirement account, like a 401k or 403b, or a self-directed retirement account, like an IRA or Roth IRA.
Exactly. And let's be real. Things aren't going to get cheaper, especially by the time many of us hit retirement. They're going to be even more expensive than they are now.
Yeah.
And so that's why we believe that we as individuals, as retirees or future retirees, need to have more than one source of income in retirement, and at least one of those additional sources of income to be something that we have more control over in terms of its growth, such as contrary to what you might be able to do with Social Security, right? You can't affect the increase in Social Security that you're going to get, right? No. And that's something that every retiree complains about every single year.
Even with the way we vote, it's probably not going to increase it that much.
Yeah, exactly. Or how the stock market's going to perform, right? You don't really have that much control over how the stock market will perform. So we're going to dive into 12 sources of income for you too to have a fabulous retirement.
So our first source is one that most of us will receive. Actually, it's the expectation that most of us will get, and that is Social Security. Nearly every U.S. worker will have access to this. Now, there are some exceptions. We know that there are folks who live in states where if they are a government worker or they work, for example, as teachers, their state doesn't participate and put money into the Social Security system for them from their payroll checks. So there are some folks who actually won't get Social Security, but the vast majority of us will. But get this, according to the Social Security Administration, as of January 2024, the average monthly retirement benefit was $1,909.01.
And now, right now, everybody should be saying, oh shit.
You're right. Because that is less than 22 or just over $22,000 a year. And based on the fact where most queer folks are telling us they want to retire, most of us will not be able to retire on just $22,000.
That's going to be a small contribution to our quality of life, especially since most of us want to retire in an unabashedly accepting place. And unfortunately, that's also has the perfect temperature.
Yeah, right.
It also has the nightlife, but also is also quiet. So trying to find that Goldilocks place they're few and far between, and those places are expensive. If you're curious about whether or not you may or may not qualify for Social Security based on whether or not you were a government worker in one of those states that may or may not have contributed to the Social Security system for you, we'll link to a Forbes article we wrote several years ago. If you're on our email list, you'll be able to get a link to that sent directly to your inbox. Yeah, exactly. So number two is probably the most ubiquitous, second only to Social Security for us, and that is the 401k or other company-sponsored retirement plan, such as a 403b or a 457, and of course you have independent retirement accounts as well. Yeah. This is we've talked ad nauseum on this podcast about how most millionaires attribute them crossing that milestone simply because of their company-sponsored retirement plan. So we can't urge you all enough to make sure that you've signed up for it. Make sure that you're contributing if possible, at least enough to get 100% of your corporate match. And then, as we've been learning on the recent Queer Money Live tour, make sure you have that money invested. You actually have to, in most cases, take a step to make sure that money is invested. It's not just going to get invested in many cases for you on your behalf unless you actually do something.
Yeah, exactly. I could think a couple of other things to think about when it comes to your employer-sponsored retirement account, 401k, 403b, or your own IRA account, is that a lot of these are ones that we have some direction or some control over, but not complete control over, right? We cannot force the market to go up. The other thing is that for many folks, they're going to be required to start taking distributions from their accounts when they reach a certain age. For most folks, depending on when you were born or what age you are, it's anywhere from 70 to 72. Some folks who are over 70 obviously are already required to take those. But this kind of forces you into a situation as to when you can get or you get access to your money. And you can start taking it as early as 59 and a half without penalty, and all the way up until 70 or 72. That's that kind of boundary as to when you can tap into these. But for many folks, they're gonna either want or need to start taking them a lot earlier, which means that money may not go as far. The earlier you tap it, the less you get.
Yeah, exactly. Yeah. And that's why we often encourage folks to look at other streams of income to hopefully subsidize their lifestyle and postpone taking money out of their company sponsored retirement plan, 401k, whatever, till as late as possible, so you get as much money as possible.
Yeah, exactly. The number 3 source of income, and this is maybe less common, but a number of people will get this, and that is either a company or government pension. For a lot of those folks who we talked about with Social Security and them not getting it because their state doesn't participate in it, these folks will typically have a larger government pension that contributes to their retirement income. But it's less common, especially if you look at the way that companies moved away from pensions in the 80s. Thank you, Ronald Reagan and Republicans, for destroying that opportunity for most Americans. But more and more companies moved away from these and put the responsibility of saving for retirement onto us as individuals. But we know that there's this huge gap of individuals who really didn't know and didn't know how to manage or use a 401k, so they didn't start. And so this isn't as common, but one of the things about these is that many of these pensions, although they might be tied to the increases in inflation, like Social Security, they're not all guaranteed to do that. And what we found is that many of them have a max on what they can increase by annually, somewhere between 2% and 3%. So if we have more years like we had in 2023 and 2022, where inflation was well above the 2.5% to 3% average, you may see that your pension check, whether it's government or company, does not keep up with the rate of inflation. That may be a difficult time in retirement if you're not seeing your increase in pay, so to speak, from your pension keeping up with inflation.
Exactly. And even though you have a quote unquote guaranteed pension, as we all have learned from Rose Nyland's experience, pensions aren't guaranteed. So just kind of keep that in the back of your mind. You want to make sure that you have other sources of income and don't just solely rely on your pension or your guaranteed pension.
Yeah. And even though there is the I can't remember the name of basically the insurance for pensions, even though that steps in and takes over for a lot of companies that have failed to maintain their pensions, it doesn't pay out at 100%. So a lot of folks who see that their government or their company pensions have basically gone bankrupt, they're not getting the full pension that they were expecting to get.
Exactly. And now would be a good time to take a time out and ask my husband, do you like how this shirt brings out the color of my glasses?
Fashion advice from John. All right, number 4, John.
This one's controversial, folks, so hold your horses. That is an annuity. It's a very polarizing topic, whether or not to buy an annuity.
Well, there must be a reason why the annuities business has stayed around even so much today. Obviously, people are using them, or it would be gone.
Well, I think the controversy sprung up from from the initial birth of annuities, and a lot of people not realizing how expensive that they could be, and they were kind of forced into a model that didn't necessarily fit their lifestyle. But over the years, the decades, annuities have evolved and become more customizable, and there's a lot of options available to you. So annuities may or may not be appropriate for you. We're not recommending it. Definitely talk with your financial planner or financial advisor, or even your accountant maybe. But just know that these are a source of income for some people. There are several types of annuities. You have your immediate and deferred, you have your fixed and indexed. And you want to keep in mind that there are fees and commissions associated typically with the initial purchase of the annuity, as well as with the selling of the annuity. And depending upon how your annuity is structured, any withdrawals, especially premature withdrawals, will probably come with a penalty. So there's a lot to know. Definitely do your homework, and this is why a financial planner would be appropriate. We did cover annuities pretty exhaustively several years ago on the Queer Money podcast. So for that, check out episodes 298, titled 7 Basics You Should Know About Annuities, then episode 307, How to Know If You Should Buy an Annuity. We'll link to both of those in the newsletter as well. So you want to make sure that you are subscribed to the newsletter.
Yeah, I think one of the things that was interesting, we had that conversation with Teresa Gallarducci, guest on the podcast, talking about why 401ks and this whole experiment has failed America. One of the things that Teresa said that made me think about annuities was, she said this idea of folks have less financial stress when they know that they're going to get a set amount, paycheck, so to speak, a set amount in income every month in retirement. And that's one of the things that annuities can do, is they can guarantee you're going to get this dollar amount every single month, even though that amount may be less than what they might be able to get through the stock market. It's interesting that they find more financial security or less stress in their finances when they know exactly what they're able to spend. And there aren't the fluctuations. Although I will say with index annuities, there is the potential for fluctuations, although most index annuities are guaranteed to not go down.
Exactly. But you're paying for that protection.
Yes, you are.
So keep in mind, do your homework. Read the fine print, people.
Exactly.
With no fees or minimums and no overdraft fees, banking with Capital One is the easiest decision in the history of decisions. That's banking reimagined. What's in your wallet? Terms apply. See CapitalOne.com/bank for details. Capital One, N.A., member FDIC.
The number 5 income stream that a lot of folks will be tapping into or can tap into is real estate. So whether that's house hacking by maybe renting a room or Airbnb-ing a portion of your home, or maybe you live in a duplex and you're renting the other side of it, or you have a garage that you're not using and you're renting that out for storage. There's a lot of ways that you can use house hacking. We did talk about house hacking on the podcast. We did an episode 9 ways to start house hacking to save money. And we really talked about a little bit more about our story about how we're house hacking, but we'll also link to that one in the newsletter this week. The other thing is that more and more folks are looking at actually building up a real estate portfolio as a source of income in retirement. So that may mean you have a lot of single family, or maybe you own a number of duplexes, or maybe you have an apartment complex or something like that. And that is one thing that folks are using as a way to create an income stream in retirement. One of the main reasons why folks are doing that is because more often than not, rents can appreciate with inflation. And so when you see the costs of owning that home that you're renting out, or the duplex or the apartment complex, the costs of those going up, you're actually going to increase the rent so that it kind of stays in line with inflation, and you're actually keeping your income in line with inflation as well.
The nice thing about real estate, and why we've been advocating for years for more of our listeners and viewers to get into real estate investing, is not only can you use that to generate reoccurring monthly income, but then at some point in your life, if you want to, you have a gigantic asset that you can sell.
Correct.
To fund, the very later years in your life when you might need more medical services, so you can have a decent quality of life or get the kind of services that you need.
Yeah, exactly.
Number 6 is life insurance. This is probably not a surprise to many LGBTQ plus people. We're all,
Especially those who were dealing with the HIV/AIDS crisis in the 80s and 90s, seeing what a lot of other folks were doing.
yeah, exactly. So you can, one of the things that you can do is you can tap into the cash value of your life insurance. You likely have to have the policy for several years and have been paying a premium to be able to start tapping into that. So you'll need to, similar to annuities, you want to read the fine print, make sure that you know what you're buying, and probably have your financial planner or your accountant or a financial advisor working with you. And what can be done with all of these recommendations that we have is like, these are just options for you. You don't want to use every single one, but talking with a financial professional can help you piecemeal the appropriate income stream for your retirement that's perfect for your situation. Keep in mind, withdrawals of the premium are tax-free with your life insurance typically, but once withdrawals are once you withdraw, any growth on that is taxed as income. So you want to make sure you understand how that's going to fit in when you start to make those withdrawals. Again, talk to your accountant.
Yeah, and I think that's it kind of makes sense why that's the case, because the actual growth in the life insurance policy wasn't designed for you to actually tap into the cash value of it. It really was designed for that asset to be transferred to a surviving spouse or surviving family members. So that's why I think why life insurance withdrawals are taxed once you tap into that growth.
Yeah, but be careful. There's no shortage of scammers.
Yes.
Trying to get you to sell your life insurance policy with gigantic fees and commissions that aren't necessary. So again, make sure the people on your team are rooting for you.
Yeah, right.
Not for themselves.
If you're watching reruns of 80s and 90s shows, you're probably seeing commercials of people trying to get you to sell your life insurance policy.
Probably.
Actually, I think I see a lot of these on CNN as well, or YouTube when we watch YouTube.
I can kind of see a retired ex-president becoming a scam life insurance salesperson.
Along with Constitution Bibles and gold tennis shoes.
Gold tennis shoes. Yeah.
All right.
Moving right along.
Yeah, exactly. Number 7, taxable investments. Now, this is aside from your 401k or IRA. These are investments that you make. Either maybe you've received them because you worked for a company that gave you shares, or you purchased them through a stock purchase plan or something like that, or you just actually took money and invested it yourself. And there's a variety of types of income here. This is actually one of the larger sources of income for folks in retirement, because folks who are contributing to a retirement account often also see that growth and are encouraged to say, I'm going to tap into that with my taxable money. And so you can look at various ways of getting money from your investments, whether that's dividends, if you have a stock portfolio that's paying monthly, quarterly, or annual dividends. And same thing with dividends from like mutual funds or ETFs. Other things that might pay you, investments that might pay you, might be interest from CDs or cash investments. I know John's dad loves to talk about how he's invested in money markets that are paying about 4.5% to 5%.
He is so excited about that Vanguard money market. He talks about it every single day.
And then probably one of the last things is when you actually sell those. So, right, you can sell that stock or bond or hard asset like gold or some sort of property. And when you have those investments and you sell them, you're going to set aside money for taxes, but also you're going to have that asset that's been converted into cash that you can live off of.
Exactly. Number 8 is also another controversial one. I don't know why I got all the somewhat controversial ones. What's going on here? Am I getting some micro messages?
I don't know if this is necessarily controversial. Thank you. I think this is it's sad that this is becoming a reality for more people.
It is, yeah. And this is exactly why we had Teresa Gillarducci on the podcast. Number 8 is having part-time work while you're in retirement. Again, it's hot garbage that we even need to be considering this. Now, I think that there are some people who want to work to some degree because that keeps them active and keeps them stimulated mentally. And that's great if that's an elective option. Unfortunately, too many are being forced into it because they don't have any other recourse, and clearly Social Security isn't covering it for them. In fact, as of 2022, 26.6% of retirees had a part-time job, and that's projected to become 29.9% by 2032. That's per the United States Bureau of Labor Statistics. And I don't know, it's a little bit sad, but just know that that's an option out there for you. Keep in mind that there are income limits when you're dealing with Social Security. So you want to make sure you're not like getting too much income and then not getting the Social Security that you would otherwise be due. We dove into that topic of the best side gigs for retirement in episode 526 of the Queer Money podcast, where we talked about that a little bit more deeply.
Yeah, and we actually gave the exact numbers. We had somebody reach out to us in comments on YouTube who said, how much can I actually make? And that's one of the things that we discuss in there is how much money you can make before your Social Security benefits start to get reduced. Again, we'll link to that in the email this week. Number 9 is a paid off house. Now, some of you may be scratching your heads. Yeah,
You get a mortgage.
right.
You get a house. You get a house. You get a house.
Yeah. What's interesting is that in 2022, researchers found that just over 40% of homeowners older than 64, or folks who were actually at that retirement age, 40% of them still had a mortgage.
Yeah.
And that is up from 25% a generation ago. So we see more and more folks actually carrying a mortgage into retirement. But how does a paid off house actually help you? Well, the one way that you can tap into that is through a reverse mortgage. Now, keep in mind that a reverse mortgage, the way in which you determine how much money you get from that is actually based on the value of the equity that you have and the value of your home. Typically, reverse mortgage companies want to see that you own 50% or have 50% or more in equity in your house. If that's the case, then they will provide you or can provide you with a reverse mortgage. This is a topic John and I want to cover more deeply on the show. We're looking for an expert, so if you know one, have them contact us. But it's you're basically taking out a loan against the value of your home, and you're living off of that loan. And more often than not, what they do is they break that down into monthly or annual payments. So because it's a loan, you're going to have to pay interest, so that's going to be reduced. And one of the unfortunate things is that a reverse mortgage does actually reduce your ownership in your home, which for many folks is their most valuable asset. So you may get to the point, depending on how long you live in retirement, you may get to the point where the asset or your home is actually no longer yours. You may own less than 90% of it. And I know that some of these are structured. That's why we're looking for an expert on this. Some of these are structured so that you can live out your life and all the way until you pass away, whether that's at 75 or 105, they will still make those payments, but obviously the payment would be smaller if you're going to plan on living, or you do end up living that long.
Yeah, I'll say that we're not inherently fans of reverse mortgages, but we're also not well-versed on them. So that's why we want to have somebody come on and maybe evangelize to us why they're amazing. But we know that this is a recourse that some people do need to follow. And we just want to make sure we share all the options with you, not just the ones that we like the most. Yeah. Number 10, though, is one of the things that we do love the most, and that is your own small business income. Some way, shape, or form, starting your own business and having some assets that you can either sell or that can create reoccurring income for you that is completely of your own. We're big fans of. So things like you might want to consider like royalties or residual payments from a business that you've sold, or art or a piece of literature you've created, whatever the case may be.
Write a book. Not literature. You're getting fancy on everybody here. Write a book. That's where you're going to get the royalties. Write a song.
Write a song.
Do a
commercial.
Rolling. Yeah.
Write a commercial song.
Oh yeah, write jingles. Actually, to be honest, this is kind of funny. We're talking about this. I did take a call one time from a woman who was talking about how her dad wrote a bunch of jingles back in the 70s and 80s, and she was getting like $75,000 a year in residual payments
from what her dad did.
When her dad did this. Yeah. And then she would take that, it went into a trust, and she would take that money and then distribute it amongst her family members. But that just goes to show you can actually create something that will give you a lifetime of income.
Yeah. So I've got all these nonsensical songs going on in my head that I've made up. I need to put these down on paper and sell them to some commercial.
Yeah.
Some of the songs in commercials are horrible.
Yeah.
But
you still end up, they're catchy enough. You still end up singing them. I know, because I have to listen to it.
Again, there's the caveat you want to keep in mind that if you get gigantic royalties or whatever or income from your small business or the art or literature that you've created, could affect your Social Security income benefits.
Yeah. All right. Number 11 is another one that's not as common as people would like to think it is, especially
for LGBTQ folks.
Especially for LGBTQ folks. And that is an inheritance. Now, this is not something you can necessarily rely on or guarantee that you're going to get. Again, we know that, especially for those of us who are slightly older in the LGBT community, we didn't have accepting families. We're estranged from them, so we may not be getting an inheritance. So don't plan on it. Even if you have an accepting a family, don't necessarily plan on it, because we are seeing that because folks are living longer, they're eating away at what could potentially be the inheritance that they pass on. As a matter of fact, the statistic that we saw earlier this year showed that only 9% of folks will receive an inheritance, in part due to longer lifespans and increasing retirement costs. If your parents end up going into an assisted care facility, they could literally be paying $100,000, $200,000 a year to live in those facilities, which could quickly eat away those the potential for you to get some sort of inheritance, which may mean, hey, take care of mom and dad if you want to get that.
Exactly. Interesting fact, though, the average inheritance of those who receive an inheritance is $266,000.
Yeah, and I think the reason why that's such a high number is, I think that the same data, or the same article that we saw, the data point about 9% of folks receiving an inheritance, they said that the vast majority of people who receive an inheritance, they're getting it because their family member has a net worth above $1 million. So if your parents have a net worth above $1 million,
la-di-da,
then hopefully you're going to be getting an inheritance. But like 95% of Americans who don't have that kind of net worth don't rely on inheritance.
Exactly. And last but not least, number 12 is HSA or health savings account withdrawals. We talked about health savings accounts recently on the Queer Money podcast. I don't remember what episode number, but it was recent. Check it out on YouTube. But a health savings account basically lets you cover your medical expenses in a health savings account, kind of retirement account that's not taxed. So after you're 65, you can withdraw from the account for non-medical expenses without a penalty. Prior to that, it has to be a qualified medical expense. But it will be added to your earned income for the year, like non-Roth IRA accounts or 401k withdrawals. So you want to keep that in mind. Again, all of these are things you want to talk with a financial planner about, your financial advisor, or even your accountant, and make sure you're piecemealing and doing this all together so everything is optimized and maximized for your needs. But these are all options to consider, and putting these together could really help you have a comfortable, or as we say, a fabulous retirement.
Yeah. Exactly. So we know that these aren't the only sources of income in retirement. We know that other folks are tapping into other things. So share those. If you have other ideas or you are doing something yourself, share those in the comments, either on this video, or email us at info@queermoneypodcast.com. If you are using or know of some others, we'd love to hear of some other innovative ways that people are funding their
Or
retirement.
as some say, innovative.
Innovative, yes, yeah. And we'll share those with the rest of you. When we get those kinds of comments, or we get those the emails like that, we'll definitely share that with everyone else, because as we mentioned in this outset, this is a really important thing for our community, because so many of us are feeling insecure about retirement. We want to provide as much value as we can to help more and more folks be able to have not only more sources of income, but also have sources of income that you have more control over. And the ones that we really see folks having more control over, especially right now, is things like a small business or or real estate income. If you can invest into and create those streams of income, you're more likely to have more control over how much money you get in retirement. The mission of Queer Money is to financially empower the LGBTQ plus community. Join us in thanking Capital One for supporting that mission. Thanks again for joining us for another Queer Money podcast episode. Remember, get your Queer Money takeaways from this episode and the resources, all those links or the episodes, podcast episodes that we talked about in this week's newsletter.
And if you want more retirement planning help, join us every Thursday for our How Gays Retire Fabulously series. Thank you. Have a great weekend. And remember, stay fabulous.